things we gotta make. Instagram and TikTok. We're gonna start with next week. I think TikTok might be good. I don't know. I've seen a lot of content, financial content that does well on there.
Yep. Thank you. Just
professional feel, I think, would be good for that platform. Did you know that 77% of white people own properties in Minneapolis?
77.
Only 25% of black people. It's the largest gap in any city in the United States.
So Minneapolis is just...
It's the worst.
It's just the worst.
When it comes to that.
No, right.
Yeah.
It's like I copied it, so just to...
Maybe you could go on Facebook.
I did that too.
So go on Facebook and share it from Facebook to Instagram.
Oh, okay. It's already, so it's on Facebook right here. This.
Or go back to the WhatsApp.
WhatsApp? I copied it already. Oh, I already copied
it. Click the link on the WhatsApp.
I did already.
Like go to the WhatsApp right now.
Oh, okay.
Go to
And then, Rich, just so you know, we are ready when you are.
You told me something okay?
And then,
do you want me to come in and help with something?
Okay, perfect. So.
All right, we ready?
What? Yes, absolutely. Ready to roll.
So where are you going to see the questions and stuff?
Thank you again for coming to the Black and Rich Podcast, where we help black entrepreneurs get wealth, maintain wealth, and pass on generational wealth. This week, we're joined by the wonderful Fola Badewa, who is top 1% of all mortgage brokers in the United States. It's going to be a very exciting episode. Please take notes if you're looking to buy a home and be ready to contact her. She's helped so many of my clients get homes. She's one of the best mortgage agents I've ever worked with. How you doing today, Fola?
I'm doing awesome. Thank you so much for having me, Rich.
No, thank you for coming on.
Yeah.
No, I really want to have you on because of your story. You know, you have a unique story of going back to Africa, coming back here, and getting your career started later than a lot of people.
Yes.
So tell me about your childhood and growing up.
So, my childhood. So I'm born into a family from Nigeria. So my mom and dad, they're from Nigeria, and so they came here, get their education, and we were born. I have 6 other siblings, so we all moved back to Nigeria, just because it was just so luxurious to living in Nigeria.
Really? So living back in Africa was more luxurious than here?
It is, in the sense that you can have a maid. You can have a driver, you can have a cleaner, and they're all very cheap.
Okay.
So that's why, so we just, think that back then it's better to live in Nigeria because you have all of that. You're like a king and queen when you live back there, until the country just wasn't doing too well. So we all moved back in 1996.
So how old were you? What year did you move back?
When we moved back, we moved back in 1996.
Or what year did you go to Nigeria?
Yeah, I went to Nigeria when I was 7.
Okay.
And then back when, in my 20s. So came back in my 20s.
So what were you working in Nigeria, just school?
So good question. So I did microbiology. That was my degree back in Nigeria.
Wow.
Yes.
What did you want to do with that when you got it?
So I just loved, just being in medical field.
Okay.
Pretty much. That was why my degree was in microbiology. And coming here, so I was thinking, okay, what do I do with microbiology? I can work in the lab. I can get more education and be a medical doctor. I can, work in the hospital, so just thinking about all of that. And then we got married and we had our first two kids back to back.
Wow.
Yeah, they were 14 months apart.
So that probably changed a lot of the plans.
So it changed a lot of plans. And then, so we just decided at that time that I should stay home a bit, before I, continue to further, my career, whatever I need to do at that time. So it was just, home. And then I got bored. I'm like, I need to find a part-time job just to get out of the house.
Yeah.
So back then it was Star Tribune. I remember that evening I was looking at the Star Tribune. I'm like, oh, wow, this company is looking for a telemarketer, somebody to schedule appointments. But what really, drew me into that was that, wow, it's 5 to 9, just the hours I was looking for. Because my husband got home at like 4:30 in the afternoon. So I said, great, I can get out of the house, leave the kids, and then I can just work from 5 to 9, Monday through Thursday.
Wow.
Yeah.
So how long do you do that for?
So it was for a mortgage company.
Okay.
So that was actually my story, how I got into the mortgage company. So
you're saying meetings for mortgage brokers?
Well, yeah.
Or for a mortgage brokerage?
So, yeah. So it was for a mortgage brokerage.
Yeah.
So setting an appointment for them, for their loan officers and all of that. So soon as I started, about 3-4 months, the management came to me and said that, well, we noticed that you're extraordinary with the way you do a lot of things. And then we do have, we want to invite you to be part of our next loan officer class.
How long were you doing the telemarketer before they reached out to you?
For 4 months.
That's it?
Yeah.
Okay.
That's it. I loved it when I started. And I will write, a lot of different notes. They're like, wow, nobody does this. They just set an appointment. You're giving notes, very detailed and all of that. They just got interested in me. I said, oh, okay. So when they, approached me to do that, I said, sure. I mean, it sounds interesting. I was still trying to figure out what I'm going to do anyways. So I'm like, I'm in. So it took 6 months. And back then, they paid $2,500 every month just to even be in the class. I'm like, that's interesting.
Yeah.
I'm like, okay, all right, this is great. So then I did that for 6 months and wrote my first loan in 2001.
Is there licensing you have to do? Or what does that look like as a mortgage broker?
So at that time, we didn't have to do a specific licensing. It's just need to get certification just to, you know what you're doing.
Yeah.
You have the training. That was what it entails back then. And that was 2001. And then fast forward to 2006 and 2007, everybody that's in the industry at that time know that there was meltdown in the industry, in the mortgage industry. And the reason was that because of all the guidelines that the government put in place. It's like you can have 580 credit score and buy house 100%, no money down.
No money down.
No money down.
That's ridiculous.
Yes, it was. But it was interesting then. It was fun. If you come to me at that time, you have 700 credit score. I'm like, just tell me, what do you want to buy? You want to buy $1 million home? We have something called stated loan.
Yeah.
We just state the income that works for whatever they want to buy.
Wow.
Yeah.
So that's what caused 2008.
That was what really caused the 2008 meltdown. So the government said, you know what? And then there were a lot of private mortgage lenders back then, and the government just like cut it all off. Said you have to go get licensed. You have to have about $1 million in trust funds before you become a mortgage lender. So it just forced a lot of people to go to the big companies. And that was, at that time, I went to Wells Fargo at the time, so got my mortgage license. Before then, I actually was I had a partner then. My partner was Tim Tisishuk. So we started at the other company together. So we're like, let's just go do mortgages together. So we actually did it as private for 2 years before I went to Wells Fargo.
Okay.
Yeah.
So why did you go from Wells Fargo?
Yeah.
And then now you own you have your own
Yeah.
team and brokerage.
Yes,
How
team,
did that process happen?
So from Wells Fargo, worked at Wells Fargo for 6 years. And I knew that what I truly want to do, Wells Fargo had a lot of stories. I didn't like the way I was treated there. There was a lot of stories behind that. And so I just thought that, you know what, I'm going to go back to being a mortgage broker, how I started. Then it wasn't for a bank. You have more flexibility. You're not working for just one investor. You have a lot of investors that you can choose from. I don't have to say no to everyone. I can pretty much do their loan. Doesn't matter what it is because we have a lot of investors. So it's different when you work for a bank. When you work as a mortgage broker, you have a lot of investors that you can work with. As Wells Fargo, they only have their product. So if you do not qualify for a Wells Fargo product, then
it's not flexible.
Yeah,
You're
it's not
just
flexible. Then it's like, sorry, we cannot help you. You don't qualify. So that's so then so as soon as I knew that I was gonna leave Wells Fargo, I interviewed a lot of brokerage, and then found AMIC. It's called American Mortgage and Equity Consultants. Back then, so myself and my buddy team, so we went there. We're like, okay, we want to start our own branch. So we did at the time. So it was Tim and I were co-branch managers, and we were just, trying to build a team. It didn't quite happen at that time because I didn't know really how to do it.
Well, about what year was this?
So that was 2013.
Okay.
Fast forward 2013. So instead of having employees or team that work with us, it was just him and I. We're just doing it. We're just, like, okay, we want to help more families, but how do we do it? It was just him and I. So it was, I remember 2014, we were still at the company, and we were doing our sales rally, and they invited this coach. It's called The Core Coaching. So they came and just spoke to all of us that, do you want to join a coaching? And then it's going to be like a mentor to really help you to get to your next level, wherever that is for you. So, and I remember they said that if you join, whatever you pay, and you don't double your income, they're going to refund half of the money.
Wow.
And at the time, I said, I'm all in.
That's a good offer.
I know, that's a good offer. You're going to refund half of my money? Okay, I'm all in. So we joined the core coaching, and I will say that is, apart from just being very grateful to God, that is what made me very successful today, is join that coaching. So it's people like that started from the scratch. It's only them. They grew their team, and, they're like 10, 20, 30, 100. They're actually the one, like mentoring you, like coaching you. So I joined them at that time. It was 2014.
So tell us, let's give some people,
Yeah.
what are some simple tips that you got from that helps you expand so quickly?
So I'm going to say just to schedule my day, just to know what to do every single day. That truly helps. And then just look at, okay, what's your goal? What do you want to achieve? Do you want to be a small team? Do you want to be a big team? What do you want to do? What's your end goal? So let's look at all the, what you want to do. Let's start from the beginning. Let's get you one person to start with you. Write down things you do every single day. Just write it down, and then figure out what it takes expert to do, what it takes a $15 an hour job to do. Then that's what you can delegate. And, calling somebody for their documents, calling someone to fill out an application, data entry, anybody can do that. So that was how it all got started.
I think that's when I'm working with businesses. There's a lot of businesses out there who
Yeah.
the owner is just so
Yeah.
tight with everything, and they don't
Yeah.
let anything go.
Yes.
I don't want to pay someone to do $10 an hour. I can do that.
Yes.
I don't want to pay $15 an hour. I can do that.
Yes.
True, you can.
You
But your
can.
time's worth more than $15 an hour, right?
Yep.
So I think that's a
Sure
huge
is.
growth point. A lot of black businesses need. It's like you
They
need to hire
truly
the right
need it.
people.
Yeah, they truly need it. That's one thing I just surrender right away. I didn't even think about it. I'm like, somebody else have done it. They're successful. I'm all in to do that.
Yeah.
So being able to surrender and being able to train them and just knowing that they're going to make mistakes, but it's going to be lesson learned when they make that mistake.
Yeah.
And then they're going to grow and, going to continue to train them. So that's how right now I have about I have 14 members now working with me.
So how did you make the switch to guarantee rate?
So I left AMEC in 2000 and let's see, that was 2019.
Oh, I didn't know it was that recently.
Yeah, it was really recent. Yeah, 2019. Then that was when I started my coach at the time said that you need a platform, you need a company that can truly allow you to build a team that really are set up to do that. So I was searching, I found Guarantee Rate, that they're nationwide, they're really good, they have, pretty much everything I was looking for. So I made the switch in 2019, and then the pandemic hit, the following year. And you would think that time, you would think that what happened, that it's just going to melt down everything. No, that was the growth. That was how we're able to grow, because we have the platform, we have the guideline. I have, it's just so clear. My vision was just very clear of what I wanted to do, that I wanted to help more families build wealth through ownership. We became empty nester. I'm like, I have more time to truly, network, to truly get out there and educate. That's a lot of what I like to do, just educate others so they know the benefits of what I'm selling, basically what I'm, giving to the families.
Yeah. I mean, that's what I find so inspiring is that so many people get in their careers in their 20s and they do that forever. But you got a late start into the career. You got all your kids to college, medical school, right? and then you grew your business really quickly after that.
Yes.
You get into the top 1% of all mortgage brokers in the country.
Yes, I mean, I'm just, very, very grateful that I'm in that category. Like I said, it's just about being structured and just having plans and then following your plan each and every day. And the way, I was coached by my coach that if you hire one person, they're going to help 5 families for you. That's just the result. Second person, you're going to help 5 more families, 10. So, and that, it's it's numbers.
Yeah.
Numbers grow. You help more people. And givers gain. You're trying to give, you're trying to hire, grow someone, everything give it to them. And you're growing and you're gaining as well.
So other than just like cold prospecting leads, are there other tools you use to get clients?
So I'm going to say my clients comes from my realtor partners. 50% of my leads come from realtor partners. And 25% comes from past clients referral, because of the way I truly stay in touch with them, in front of them. I do like 3 events every year, big events for my past clients. Like truly, like we're living life together. So, for example, last year we did the water park.
Really?
Yeah, we did water park. Yeah,
Wow.
I did that with one of my realtors. So we, it was it's like bring your family and bring another family. So, and you do something like that for people, you truly, you truly have their heart to speak for you. So 25% of our leads come from our past clients that just call us and, this person help this person. And I will say the current client referral too. The referral that I receive, once I, show them a plan, what they need to do and all of that, they're truly happy with us. And I let them know my goal and my team's goal this year is to help more families build wealth through homeownership. Do you have any coworker that, that's thinking of doing this? Any family? I kind of help them think of what they, what I'm requesting from them. Do you have any, any personal friends that want to do this? Just asking, with like that, knowing that we truly care, they do refer their friends.
Yeah.
Even from
that's the biggest reason I wanted you on the podcast is that a lot of people don't know this, but in Minnesota or in Minneapolis, 77% of white people, adults, own their home, while only 25% of black people own their home, a 52% spread, which is the largest of any city in the nation. Wow. So I really want you to be able to educate people.
Yes.
Is what do you need to do? I'm a business owner.
Yes.
How can I buy a house?
Okay. So business owners, this is in the last 2 years that this guideline came. It's been so big, and I'll say I help 2 families monthly because of this new guideline that business owners can truly own a home. So in many years, if you're business owners, how can we document your income? It's from your tax returns. But business owners, let's assume you make $100,000 a year. You have, you're a truck driver. You pay for your employees. You repair your truck, gas, and all of that. You're like, okay, it's $80,000 expenses that I had over the year. So that means $20,000 is truly your income. So what can you buy with $20,000 income in a year? Not very much at all. Especially if you have car loan, you have student loan, you have, other debts that, you already have. So we have a guarantee rate 24 months bank statement program. So we will not need your tax returns as a self-employed borrower. We just want to see the money that's coming in and the expenses that you're spending money on just to see if it's on a business. And then we average your deposits over 12 months. So just taking like maybe 25% out of it and give you 75% of that deposit. Many people have good deposits on their bank statements.
So for a business owner, I know in the past it's always been, if you own a business, you got to have the business for 2 years before you can buy a house. Is that still true?
That is still true. You need to have your business for 2 years. And then that's why we need the 2 years bank statement.
Yeah.
There's another program that we can use 12 months bank statement, but you have to have registered your business for 2 years or more to be able to do that. And then for business owners, we believe you have the money. You have to put 10% down because lenders think about that as risky borrower, that we're not really using your taxes, but we're lending you money. So if you are able to put money down, then that's awesome. It's like, okay, the risk, is lower.
Yeah.
Yeah.
And then also, just for individuals, I hear a lot of people, my credit's bad, and there's no way I can get a house. I don't have down payment money. I'm not even going to try. Do you believe that everyone can get a house, or you have to make a bunch of money to get houses?
No. And I was telling, someone this morning, I said that everyone that came to me in the last 22 years that I've been a mortgage lender can get a house. They're able to get a house if
every single person,
if they follow the plan.
Wow.
Some people don't follow the plan, and they will not be able to get a house. But if you truly can follow the plan, you can get a house. Because I believe credit reports, your credit history is, it's fluid. Whatever you do to it, that's what it does. So if you make payment on time and all of that, your scores will be good. if you suddenly stop making your payments, and your credit will be bad. So I truly believe that everyone can have their credit repaired if the credit is not good. And there's some that I can do myself if it's just about, okay, let's settle this collection account, let's pay this credit card down, and then in 30 to 60 days you'll be fine. Or if it's maybe a credit with like a lot of tax liens and a bunch of things, I do refer them to a credit repair consultant that truly will help them write the letters, truly help them, hands-on, so they can, clean up the credit and be ready to buy. Yeah.
So, what should an individual or business, when they come to you, are there things they can be doing already, or what do you look for when someone comes to you?
Being business owners or just anybody?
Anybody.
Yeah, anybody.
Yeah.
Okay. So when they come to me, I tell them 3 key things if you want to buy a house. Number 1 is your credit. So it doesn't matter where you're at. I would love to pull the credit at the meeting.
What's the credit score are you looking for? Like ideally, if I have this credit score, I'm good.
If you have money, you can have 580 credit score and buy a house.
Wow.
And put 3.5% down on an FHA loan.
That's it?
Yeah.
Wow.
Yep, 3.5% down. If you have that money in your 401k, well, you always say that don't take your 401k
Stop
out.
telling people don't touch your 401k.
I know. As a mortgage lender, we always say it's okay. Okay, savings, checking, CD in the bank, you can use that if your credit score is low at a 580. But to obtain down payment assistance program, we want 650 credit score.
Okay.
And we're able to get your down payment from the city, from Minnesota Housing Down Payment Assistance Program. Right now, the minimum is $12,500 that you can get.
That's the minimum.
That's the minimum.
Wow.
Yes. If you have 4 in your family, you can get up to $15,000. And if, then $17,000 is the maximum on that program.
Is that something you're paying monthly for once you get the down payment assistance, or how's the payback work?
Yeah, very good question. So if your income is low, so for 2 in your family and you make less than $89,000, there's no payment on that money.
Wow.
There is no interest on that money. You get to pay back whenever you sell the home and whenever you refinance the home.
There's no interest.
There is
if you
no
make under 89,000.
There is no, yes, 89,000.
That's incredible.
It's incredible. It's incredible.
There's no reason not to do it.
There's no reason why you can't now be a homeowner. Yeah. There's just a lot out there that can help first-time home buyers.
And I think you're saying there's something for investment properties as well.
Yeah, so there's if you're buying a home for the first time and you're buying a duplex, the city of Minneapolis they just started about a year ago, $20,000 to $40,000 down payment help. And if you live in the home for 5 years, it's forgiven, fully forgiven.
What's your number? We might have to talk after this meeting. I didn't know it was forgiven.
Yeah, it's fully forgiven, the $20,000 to $40,000. They'll look at your income, see how much you need on that property. I just did one. They got $20,000, and the earnest money they put down, for the contract, they actually got it back at closing. Wow. Even the title company's like, they forgot to give them the check. They're like, oh, I'm sorry. I'm not used to writing people check when they close. I'm used to getting the check from them. So
there's no, this is why I tell a lot of people when I talk to them, I think too much in our community, you can tell me if I'm wrong, there's so many excuses.
So many excuses.
Everybody has excuses. And
so many excuses.
Right now, there's no excuses.
There's no excuses.
They're giving you free money if you just live there for 5 years.
I know, for
20
5
grand.
years. Yeah, 20 grand.
For an investment property where you can rent out the other side.
Yes.
Which will pay off your
mortgage. It's no-brainer.
Yeah.
It truly is. Yeah. Yep. So
wow. I'm serious. We might have to talk after this. Okay. I didn't know it was that great.
I'm glad I'm here. So that's the first. So we talk about credit. So second, we talk about income. So I just give them, if you're W-2 earners, we want to see your pay stubs for 1 month. We want to see your W-2s for 2 years. So we can average your income over 2 years. And that's how we determine how much you make, and that's how we will know how much you can pay out for a mortgage. So, and then, of course, the down payment. So it's always credit, income, and assets for down payments.
So when you're looking at income, how do you determine how much someone qualifies for? Is it a percentage of their income?
Yes. So if you have very good credit, we can go up to 50% of your income. For example, if you make $5,000 a month, $2,500 will be your buying power. What does that mean? That means that's the maximum amount that your monthly payment can be on your new mortgage and everything you pay on your credit. The reason is that the other half will go towards your food, gas, recreation, family, and everything else. So that way we're setting you up for success, knowing that you're able to pay your mortgage with no problem. And if you don't have any debt, you can go up to about 45% of your income for your mortgage. We believe maximizing what you can buy, because the bigger your investment is, the bigger your investment rate of returns will be.
That makes sense.
So
I've also heard of people recently having like 4 or 5 people go buy investment properties.
Okay.
Like getting groups together. Is that something that you can do, or they've done that kind of off the books?
No, you can do that. Yeah, I'm actually doing one right now that they're 3.
Okay.
Yep, 3. They're buying 4 units.
So how does that
together.
work? They just write a contract where they each put it on down the payment. How do you work that? Run that through the credit.
This one, I'm just gonna use this as an example. So 3 friends, they're buying this 4plex together, and the down payment and the closing costs they're required and the reserve is about $150,000. So they've all put that money in one person's account before they came to me. The money already seasoned in the account, meaning it's been there for over 2 months. So, and then when they close, all 3 of them will be on the deed. Their name will be on the deed as the owner of the property. So we requested for all of their income information, all of their W-2s, all of their pay stubs, and then the bank statement. We got bank statement for just 2 of them. It's fine, even if it's one person. As long as you have all you need, we're fine. So people do that because they want to invest, but they don't have the money to do it by themselves.
Yeah.
So that's why they want to get some groups to do it. So it's a legal process, yeah.
All right. I didn't know that.
Yeah.
All right. So, but
It truly is.
for people listening, when's
Yeah.
a good time to come to you? When should they come approach you for a meeting?
So anytime that you think about that, I'm going to have to buy a home in the next 2 years, just come talk to me.
In 2 years.
2 years.
Okay.
2 years. Because some people made an error. They're like, they come to me, they're like, okay, this is March. Oh, my lease expires in May. You're coming to me now. It's great if everything is fine at the meeting.
Yeah.
But if I need to do something, repair your credit, then you don't have time.
Yeah.
If you need to save money, then you don't have time. So I say, if you want to buy a house, 2 years, just come talk to me. We have an amazing follow-up process that, every month in the beginning of the month, we'll pull everybody up. Oh, this is, we have like 23 follow-up this month. So if you come and then we'll tell you what to do, we'll like, okay, May follow-up. May, we'll contact you. We'll see where you're at, what you've done, and then just really, truly just guide you through the process.
That's great.
T-Buy, yeah.
Well, let's see if we have some questions. Well, thank you, Wendy.
Thanks, guys.
So how did scheduling your day help you specifically? What did that do for your time? Make it just more efficient with your time?
Yes. So, Gabe, I'm going to answer that. So basically, so for me, I have weekly numbers for myself that I want to reach, weekly goal. That, okay, I want to see face-to-face 10 people every week. I want to break bread with 6 people every week. So if I don't now put it on the calendar, I'm just going to be all over the place. I will not know how, I'm going to read that. So for example, on Monday, I'm like, okay, Monday's a day to touch base with all my realtor partners. See, if they have any question, if I can help them with anything or give them feedback on a file that I haven't processed with them. And Tuesdays is a day that I call my, everybody in process in the pipeline. Call the agents on both sides, and then, call the clients. How you feeling about the process? Do you have any question? Here's your updates. Here's where your file is at. And all of that just make me reach my number that, okay, my goal is to have 25 new clients every week. So the activities make me, allow me to reach that goal.
I see.
So yep, the activities make me.
I think that's a big thing that people worry about is they always worry about the end result.
Yeah.
But that's a trailing indicator. You gotta really at the front end activity.
Yes, it's the activity that matters. Sometimes I look at the end result, but it's like even the end result is not there if it's short. I just need to keep going with the activities. I know sooner or later the end result will be fine.
Yeah.
Once I keep doing the activities.
Is it true that you can use your rent payment to build your credit?
Rent payment to bring you. Yes. Yep. So, what's their name? Renters Warehouse. If you rent from them, they will report on your credit.
But if it's not Renter Warehouse, it will not count.
Yeah, it will not count. Yeah, if they don't report on your credit, it's not going to count.
Okay.
You just need to report on your credit.
So how do you know if it's by Renters Warehouse when you're buying for a rent?
Once I pull their credit, I will see their name.
I'm saying like someone else. Like if you're an individual,
okay.
like I want my rent to count. How would you know if it's going to count or not?
I'm going to tell them, no, it's not going to count.
Okay.
Let's do maybe your utilities,
Okay.
something to report.
I see.
Yeah. So, what is land trust? I'm not thing there.
That's a good question. What is a land trust?
Land trust, okay. I'm not 100% sure about land trust, but here's what I know about that. I actually was talking to an agent today. So they found a house, and the house said that this is land trust property. I believe you do not own the land if you buy a property from land trust. So, and if you want to sell, you are in it together. You don't own that home 100%. You own it with that city that have that property.
Okay.
So that's
interesting.
That's what I know about it. Yeah. I'll talk about not like she treated at the previous bank.
You think?
We should talk about that.
Do you want to talk about your Wells Fargo situation?
Yes, I can talk about it.
Okay.
Yeah, yes. So I would say it's a huge discrimination, when I work at Wells Fargo, and I work at the one in Woodbury, predominantly, white folks, work there. I was the only black, definitely, that work at the bank. And so we have all our offices, all the loan officers. There was a day that a client came in. Normally when you come, you sit at the lobby, and then the receptionist, come to see which loan officer is available. And I was available. So I'll, walk out to, say hi to the client so I can walk them to my office. And as soon as I, brought my hand to do handshake, and it's like, just like look away and spoke to the receptionist that I'll wait for the next loan officer.
Wow.
Yeah, that was.
How'd they handle that at the branch?
So when they said that, the receptionist was kind of rattled, didn't know what to do, because it was like, okay, he clearly doesn't want me. He doesn't want to force him, to me. It's like, oh, okay, well, just have your seats. Then it will take about an hour if you're fine with that. They're like, sure, yeah, I'm fine with that.
Wow.
Yes.
You wait an hour just not to meet with you.
Wait an hour not to meet with
ridiculous.
me. Yes. Another one happened that I remember my manager at that time, very kind manager. So, they did application submission online, and I was just processing it. Then I had to make an appointment to talk to them to confirm the application, and then just go over their loan options. So as soon as this family found out, okay, well, this black person, okay, I don't want this person. So I left a voicemail for them. After the first appointment, then they never returned my call or anything, and they went behind and said that they want a different loan officer. So my manager said, well, I'm sorry, they're all equally trained. She started your application. We cannot move it. If you truly do not want to work with her, that means Wells Fargo will not be able to do your loan. I was really thrilled. It was a very kind manager that I had at the time. So that felt good that, at least someone is,
Yeah. I mean, I can't believe they let the first one let them.
I know, yeah.
I would have.
Yeah.
I probably would have left that day. Like, are you serious?
I know. I know, yeah. We see so many people get overwhelmed, but I guess the circumstances for good reason.
Yeah. How do you go back after a situation like that?
So, okay, understand the question. So, like, overwhelmed by the circumstances for good reason. So, is this like?
I think he's asking like, how did you like overcome that? Like, if like that's.
Yeah.
I mean, that would be a little gut punch, right?
Yeah, it really was, and it wasn't the first time.
Wow.
Even my very first company, my second company. So over the years, I've always worked, predominantly with, Caucasian clients. So and that was one of the reasons that I want to build my team, so I can work with whoever I please to work with. So yeah,
I love that.
Yeah.
You don't want to play by our rules, let's make our own.
I know. I want to work with whoever I feel like working with. Yeah.
Good. Is that all the questions?
Okay.
Oh, there's a few more here.
Okay. Does credit actually work?
Yeah, I've heard a lot of credit repair scams out there, or credit repair people.
Yes.
How are you able to? Does it actually work? It sounds like it does that you bring people up. But how are you able to know what's real and what's not when you're out there?
Yes. It's so unfortunate that there's some company out there that will put you on a payment plan and will do exactly opposite of what you need to do to be able to buy a house. Like, you cannot have a dispute on your credit and qualify for a mortgage. And that company, that's all they do. They will put your account in dispute.
Wow.
So when you pull credit and you see, first thing I always say is, please go cancel your subscription now. You'll be paying like $159 a month. I found somebody I've been paying that for over a year.
Wow.
Over a year, just monthly fee. So it does work. You just need to, when you meet the right person, the right mortgage consultant, they'll be able to tell you what you need to do. Sometimes it's not that hard on the credit. It's just those people, they just make it really awful because of things they do to you. They just want your money, pretty much.
I'll keep you in forever.
Yeah, keep you in forever.
Yeah.
Yep. So it works. For business owners.
What kind of cash flow are you looking for the business owner program?
So it really depends on what type of home you want to buy and what type of debt you currently have. So if you make $6,000 a month on your bank statement, so if we see that, okay, you constantly deposit total of like $7,000 in your bank account, and we're able to see that, okay, it's constant, and then we can average, and we say, okay, we're giving you $6,000 income to use, and you don't have a lot of debt, maybe car loan, couple of credit cards, total about $500. So buying power of the $6,000 will be $3,000. So if you already have $500, then $2,500 can be for your mortgage, and $2,500 you can buy a house of over $300,000.
Okay.
Yeah. So.
Good. Any last ones here? All right. Well, thank you, Fola, for coming on. The information was wonderful. You educated me. I might have some people to send your way.
Okay,
I might have myself to send your way. So
that's
thank you.
That's awesome. Send them my way. Thank you so much for having me. This is really amazing.
Yeah.
Thank you.
Well, thank you guys for watching the Black and Rich podcast again. We can change these stats, but we can't do it alone. Yes. Please share this video with people you know who need to get homes. Please share Fola's contact information with anyone you know renting. Anyone can get a house within a few years. Send them their way. Yes. You don't want to be paying someone else's investment. Get your own investment. Yes. Hope to see you next time. Thanks again.
You didn't post my information though. It's too late. Oh, okay, on the main.